Okay, let's try that again, shall we? So I was just speaking with not the microphone on. Okay, good. Yeah, so what I was saying here is that we're going to take a look at the markets. Yesterday we had some very bad jobless numbers from the US. About 3.5 million people applied for or made some unemployment claims in the US. That was higher than the sort of 1 million anticipated. Still, the markets went up, and we're bullish, so that went good for us. And obviously, we use the technical analysis, and it's always a lot of guesswork when you're dealing with the financial markets. But we're going to talk about that. We're going to talk about the latest development with the coronavirus, and hopefully, I can help you with your trading with a little bit of my insights to the markets. If you like it, don't forget to hit the like button. And don't forget to subscribe as well, because we do this every day at 9:30 a.m. London time. Okay, let's begin. So we're going to begin not necessarily by looking at the charts. We're going to begin by taking a look at an Excel sheet I produced. So this is countries, total cases, new cases, and the growth rate. And it's the growth rate that I'm focusing on. Because if you look at the growth rate, how people reacted during the SARS virus in 2003, how they reacted in China in the end of last year and beginning of this year, then and also even now again, it's an important factor, and that's what the investors are looking at: growth rates, not necessarily looking at new cases, the total number, and they're not definitely not looking at the death rate. Death rate has very little, if any, impact, because the death rate you can derive that with the total of new cases. So it's quite straightforward. And reason for mentioning that is if you're looking at TV and stuff like that, they're changing the narrative to death rate, how they are increasing. Well, of course they're going to increase. Like if you take a place like Italy, where the death rate is like 10%, well, yes, there is new cases. It's probably going to result in maybe 62 deaths or so, with a lag of maybe 2 to 4 weeks. So those numbers will continue to rise. But for us as investors, speculators, it doesn't help us because it's backwards looking. So what's going on here? So Italy's still on a good path. So the reading, I'm using data from Worldometer. I'm using the same technique here. I think the key point is you can sometimes get different numbers from different people, but the important thing is when you look at the numbers that you use the same source and sort of look for variations. The absolute number is not super important. So as you know, the growth in Italy has been about 8.1, 8.2, 8.4, so around those numbers in the beginning of the week. And the numbers on March 25th, according to Worldometer, was 7%, which is, again, much better than we saw in the past, and single digits, which is really good. Now the reading, the latest one, was for 7.7, so a bit of an uptick there. Not huge, but a bit of an uptick. In the US, which is where people are focusing on, you have a growth rate of 20.2. This is way too high. It's okay. It's not like we had in China when you had like 35% growth rate per day, which I'm sure the US had in the beginning. Everybody had some very high growth rates in the beginning, but we're at 20. And if you look here when they shut down, so California shut down on the 19th, so that would be 1 week and 1 day from now. And then you have New York City shutting down on the 22nd, which is literally on Sunday. So in the US, and these two parts of the US, they remain, we probably have another week or so of high growth, but there's already talk. I think they said Detroit could be the next center of massive spread in the US. And this is going to continue like that until they decide to just shut things down. And there is a way out of this, as I said before. If you look at the Chinese growth numbers, it's 0.1% in the last reading, and before that was also 0.1. And people are starting to go back to work, and they had a shutdown of about 2 months, but they did it fast, they did it quick. Well, on a relative basis, because they also, in the beginning, of course, they didn't really know exactly what's happening, and it's obviously local governments also tried to keep things under wraps. They didn't want to let everybody know that they had these issues, so obviously they also reacted slowly. But in Italy as well reacted slowly. I don't understand why everybody thinks it's going to be different for them. And now the US have reacted slowly as well. But key point here, what I wanted to say is that we have a way out, and that's the China way out. We have the way out, and this the Italian way out. Is it going to be painful? Of course. That is what's needed if you want to keep death rates low. So what else? These are some comparisons from 2 days ago and yesterday. So again, US moved up from 19.6% to 20.2, which is not very good. This one is a bit scary, from 11.6 in Germany to 15.1. So something is happening. Maybe they need to work more on that. You have France, which saw a little bit of an uptick from 11.6 to 13.5, which is not really good again. And then you have the UK, which is at a high 15.2 and increased to 18.3. And this maybe what's happening now is to have ability to test more, possibly, but obviously we want to control this. And South Korea has a very nice low growth rate of 1.1. So things are not looking that good, especially not in the US. UK also needs to do more, and I really want to see the numbers from France and Germany over the weekend and early next week and see if there's been some improvement. In Germany, they sort of introduced something on the 20th, so they're 7 days in, and France on the 17th, which is also, this is about 10 days in. I would have guessed that France would have been lower by now, and hopefully that can improve. Something that they have been doing badly in many of these big cities is that they cut down on communal transportation. So like buses and metros and undergrounds and stuff like that, train service, which means that a lot of the key people like nurses and doctors that they don't use a car to get to work, they are now in crowded trains and crowded buses, and effectively could pick up infections from other key workers. And in fact, actually, people that work in the hospital in the past have been a large part of people that get the disease, so they would probably giving it to other people. Maybe that explains a little bit why the numbers are up, but obviously it would be good if we have some sort of solution for that as well. What's interesting though is this. You can clearly see sort of a bit of a change in the mood when more and more countries started to lock down, because locking down is bad for the economy in the short term, but it's good for the numbers in the 2, 3, 4 weeks down the line. So let's talk about stock market. So we talked about the S&P 500, right? S&P 500 was trading down here, and I said, look to buy here, around this area here, with stops just down here. We reached that take profit level spot on. So short-term traders, that would be an excellent opportunity to book profits around here. We're looking at this today. I have tightened up the trend defining level a little bit to 2,391, which is this level down here. And if we do go down to something like 2491, then I do think people will try to buy down here. So look for a little bit of a pullback. Now, if you're a longer term trader, if you want to keep the positions for a bit longer, I mean, I'm holding on to my positions as well, then you would be ready to actually give up most of the gains and even have a small loss. But I will remain bullish as long as you're about 2391. And I'm not sure if this properly qualifies like a head and shoulders, but I guess if you push it, you have a head, you have a left, you have a right shoulder, and then you have that move here. So those initial jobless claims numbers, why didn't they not scare people? I think it's because, remember when the market was going down and down and down and down? We had the fastest decline in the history of stock markets or something like that. Well, what did we just have? We had the fastest increase in number of initial jobless claims, so people looking that are unemployed in the US. Yeah, that is why. So we had that massive drop, and now we have the massive problems or looking bad looking numbers, because the market is forward looking. And we need to remember this. This is not just companies going bust from one day to another. It's companies taking precautions, so they're firing their team today or their employees today, so they don't have to pay salaries over this period. And then when things come back to normal, who are they going to call? They're going to call the same staff they had before. So it could be easily that you have a lot of unemployment now, but then that could quickly be reverted. The problem is if this is extended for a long time. So the government, of course, is stepping in, and in many places it's like 10% of GDP that they're propping up the economy with, which is a huge amount of money. So I think the interesting is going to be how long the lockdown is going to be, and also what is going to happen with secondary effects. The people working in the bars and hotels and stuff like that, they can't get any income now. So what's going to happen? Are they going to default on their home mortgages? Well, that could put some pressure on the bank, and then the bank can't lend out to other people, and then suddenly you have more and more problems. Or maybe so it's those chain reactions which are the problems, which is actually impossible to properly assess. But for now, again, the people are looking at lockdowns, good for the economy in the long run, good for stopping the spread. And I think that's why where they're buying. And again, the numbers were really bad. So we're seeing that correction because the numbers were really bad. And in fact, they were not bad enough for the market to sell off more. So if we go down, I'm going to continue to be bullish. German DAX. German DAX was one of the first ones to move, actually. Moved ahead before we saw the moves in the US stock indices. So we're talking about buying here. Inverse head and shoulders target of a move like that. We still haven't reached that level. Now, I'm not a super big fan of this, but it could potentially be interesting to buy down here, very close to the low. If not, you got yourself a double top. This is a bit of an ascending triangle right now, which is like that, and then like this. And if we do take out the high here, you can have that push there. So this is a continuation pattern in this situation here, and it still tells us to buy. We can buy on the dip, we can buy on the breakout. Euro USD. So Euro USD, the idea was to buy here a few days ago. We went all the way up, more or less what we wanted. We were talking about a range here, like a double bottom, double top breakout. Let's see if we actually reach a target. I think we did. Yep, so we reached that target. Now you have no correction from yesterday, so it's correcting today. It going down a bit, maybe go up a bit, but I think let's look if we can potentially buy back or buy again at the 50 level at 109.16, and then we target the high, and then we can possibly target this level up here. GBP versus the USD is bullish about 116.26. If I take fib from low to high, I will look to buy here. Remember, I was bearish up until this level. We got stopped out, and I said let's turn bullish and let's see if they can go upwards. And yesterday I said look to buy on a pullback, but that pullback never happened. Maybe we're not going to have a pullback now either, but I'm going to still wait for one. So look for that correction down to 119.72, and then we could target the upside. Crude oil prices. So crude oil prices took out this low here, which is the 22, let's say 23 level or so. Did that yesterday, and then went up again and went down. So it was in a bit of a narrow range here. So it took out that double bottom, and now the difference between these levels here gives you a target. So it's a drop of $2.26, and maybe we're gonna go lower, testing these levels. And this is not a very good quality setup, by the way, so I wouldn't really trade it, but let's see what happens. My preference, it looks like goes down and then pushes up, then goes down a lot and then pushes up, goes down a lot and pushes up, and it really struggles to trade down. And when something struggles to trade lower, that's a bit of a warning sign. So if we take out 25.16, then I think we can turn bullish. We'll target high and then probably lower and then up. So that's what I'm waiting for. Gold prices. So I decided to take a step back here on gold. So the idea was to buy on a dip here. looking at this today, you know, it really sort of created a double top in the very short term on the 1 hour. If you look at it from a 4-hour time frame, we're still within. This is not a very strong market, a trending market. This is a very fragile market which found support down here and then found resistance up here. So we're closer to resistance than to support. So I'm pretty much neutral, but if you want to force a trade on, you really just want to know the levels. Then in the very short term, the trend is bullish about 1593, and yeah, we're going down and maybe we'll go up a bit. But if we take this out, we can have a bit of a correction. But again, I wouldn't be buying here, and I wouldn't necessarily be selling here. I would wait for this market to go up. If it goes up a lot and we have some sort of sell situation, maybe we can do that. Alternatively, if it goes down, we just look to buy at lower levels. Okay, let's see if you guys have any questions. Good morning, Chris. Good morning, Daniel. Oh, right. So first day in lockdown in South Africa. Over 1,000 cases, first 2 deaths today. Okay, good. It's good. Lockdowns are good. I know it's harmful, but lockdowns are good. Hopefully things progress good in South Africa. I think the benefit of countries like South Africa and, for example, Egypt and places like that. I'm touching people in Egypt, that's what I'm saying, and as well Nairobi, is that you have quite a young population, which is good because you don't get affected the same way as we are. So hopefully you can weather things better than us. Obviously the challenge in Europe, I mean, the challenge of course is ventilators and things like that. But yeah, hopefully the effect is not going to be as bad. We got Mauricio and we have Marvin. Good morning, guys. I hope you guys are doing well. So if you have any questions, just put them in the chat box. So to tell you something I know, for example, because ATFX, right? Okay, so 50% of the population is under 24. Yeah, so it's gonna be a breeze. Of course, you're gonna get it, and it's gonna be difficult. I saw some reports actually, or this Englishman that was living in the UK, not in the UK, in China, in Wuhan. I think it was an English teacher, and he explained how what happened with him before everybody knew what was happening, and he said it was really, really painful, but he made it out without needing medical help, even though, you know, I think he didn't even use normal medicine because he's like into Chinese medicine. So yeah. So yeah, what I was going to tell you is that, for example, at ATFX Hong Kong, what they told me over there, and the reason I think why they don't have so many cases in Hong Kong in particular, is that as soon as this happened, all these guys remember what happened in Hong Kong in 2003, because Hong Kong was one of the worst hit, and there was quite interesting actually, because you had this doctor that was staying at a specific hotel, and he infected a ton of people. He became a super spreader. He infected a ton of people on that same floor. Somehow they managed to get SARS from him. You should actually check it out on Wikipedia. I read it already, I think in January. It reads like a horror story when you look at the timeline. I mean, they've done a movie, I think, on that, and they're probably going to do more. They're going to do movies on this as well, how things are spreading. But it's quite interesting to see how things worked out. But yeah, so what they do over there is that when they come to the office, they will measure your temperature. Of course, people can measure your temperatures at home, but they will measure your temperature when you come to the office. And then as well, everybody uses face masks when they're at their desks, and they have hand sanitizer, and people wash their hands more frequently. And then around after lunch, they measure your temperature again. So if it's higher than if it's fever temperature, you need to go home. And then if you want to, you can come back the day afterwards. And again, if your temperature is too high, then you send home again. So that's really good and very, very proactive. And I think that's one of the reasons why they don't have as many issues. Okay, guys, it looks like I don't have any questions. which is fine. It's almost 10 o'clock and I have my daily meeting at 10 o'clock. Guys, if you like the presentation, don't forget to hit that like button. It's really important because that sends signals to YouTube that people are enjoying this, and then that they will show that for more people to discover the channel, and that grows everything. And that's really important because that sends signals to me. This is something that people like. This is something I should be focusing on, because time is scarce. You know that yourself, and I really want to thank you for joining me this morning. But if I can choose to do webinars versus articles, you know, that's sort of the challenge. In fact, before, when I used to work for another broker, I used to do it in the morning and in the evening, but I don't do the evening one anymore, just because it didn't receive enough support. So what do you want? What do I want you to do? I want you to like the video. I want you to subscribe if you're not doing it already, and you can even leave a little comment, like just a little thank you. Stuff like that would be amazing. All right, guys, we're gonna wrap things up. Stay safe out there, and I'll see you guys on Monday morning. Thank you.